Well, good morning, traders and investors. Today is July 29th. My name is Roger Scott. I'm the head trader of Wealth Press. And what do I always say? Let's get into it right now. Now, before I get into the news and all the accoutrements that come with it, I just wanted to give you guys a little outlook on something. I don't know if you've noticed or not, but the markets have been opening higher the last few days and then gradually coming down. That's a typical sign that the market's going through a distribution phase. Typically through a really strong bullish phase, you'll see the stock market open a little lower and trade higher as the day goes on. But right now, what we're seeing is the stock market actually opening up higher and drift down. I was looking at the NASDAQ 100 yesterday and throughout the day. I mean, look at this close yesterday. I mean, we drift, and then we went lower. So that's a sign that the market is going through a distribution phase. It's a very, very simple, very basic, but a very accurate sign. If you see it 1 or 2 days, it's not meaningful. But if you see it for about 5, 6, 7 days, opening, pre-opening higher, Dow about 100 points higher, and then slowly going down as the day goes on, that's a distribution phase. So again, I wanted you guys to know that. Let's talk about world economy, and then I'm going to talk about some weak stocks in the technology sector, or the NASDAQ, which is the weakest sector now. We went from being the strongest to the weakest, and I'll explain why. So let's get into it. World markets traded in a narrow range Wednesday as investors look for the U.S. Federal Reserve for clues about the U.S. outlook as pessimism over the fallout of the COVID-19 pandemic continues to ravage this country. And they're talking specifically about the FOMC minutes, which are coming out, not the minutes, the meeting, the resolution of the meeting. That's happening today. It started yesterday. It's going into today. We're going to get the news at about 2 o'clock, 2:30 p.m. Eastern time. Till then, I'm not expecting a big trading range. I'm expecting the market to be in a fairly tight range because most institutional traders don't want to make big bets ahead of the FOMC, and especially the GDP that's coming out tomorrow. So we got a full plate. Fed is largely expected to keep short-term rates at their record near zero, but they're also looking to hear what it says about how long they may stay there. That's the big key. Right now, from what I'm understanding, they're talking all the way till the end of 2022. The central bank helped launch the stock market recovery in late March by slashing interest rates and promising to buy treasuries, corporate, and other debt, pumping money into the economy. And so far, they've been doing a pretty darn good job. On Tuesday, the Fed said it will extend the lives of 7 of its lending programs. We already knew that. Overall, the pandemic is primarily concern for the markets. Absolutely. 80% of the market is being driven by the pandemic right now, as secondary breakouts or outbreaks raise the likelihood of further lockdowns to curb resurgence in countries that had thought to have virus under control. America, China again, things are just not looking pretty. I hear Spain is doing really bad. I mean, even North Korea started getting cases. Oy vey. In corporate news, the week's market, the heart of earnings reported season for the S&P 500 and several big companies, gave results that fell short of analysis, already lowered expectations as the pandemic stole customers away and increased costs. Yeah, we had revisions after February, after the pandemic, and now they're being revised even lower, and some of them are not even hitting it. I mean, the numbers are just not looking that great. Rising COVID-19 counts in many U.S. states are bringing new waves of shutdowns, and investors are hoping that Democrats and Republicans can reach a deal on more aid for the 16 million or so Americans who are getting unemployment benefits, even though the two sides are far apart. Crude oil is still above $41. Again, that's the major nose-bleeding levels for companies that are like ExxonMobil, who need to buy crude oil from the Middle East. So at least they're not bleeding right now. And again, I've been saying that every day, but it's really, really important. Now, looking at stocks, I wanted to go through something with you. This is the NASDAQ yesterday. Over the last 5 days, this is the last 5 days on the NASDAQ, all right? This is an intraday chart looking at 5 days. So you could see it's been kind of choppy. If you look at it on a monthly basis, we've pretty much almost at the 200-day moving average on an intraday basis. If you look on a daily basis, it looks like we just started cooling off. But again, look at the divergence that we're seeing. And I went over this yesterday. This is negative divergence, all right? Price going higher, oscillator making lower highs leads to breakdowns. You're not convinced? Let me show you a little piece of history. Price going higher, trend line weakening. The momentum is getting weaker. Notice higher prices, breakdown, momentum getting weaker. Higher prices, momentum getting weaker. Let me extend this to make this proper. Are you seeing a similarity? Higher prices, weaker momentum. Higher prices, weaker momentum. What followed here? Are you seeing what I'm seeing? So this is why I want to talk about the NASDAQ sector today and use my relative strength scan. But I don't want to talk about the strongest stocks because we're in a deceleration mode right now. I want to talk about the weakest stocks. So here is the strongest 100 stocks: Tesla, Melly, eBay, Nvidia, PayPal, JD, Lulu. Notice the same stocks that were going higher are still going higher. AMD's on here, Cadence's on here. If you wanted me to give you a few new ones, CTAS is new on the list, NTES is new on the list. But overall, it's the same old stocks. You got your Amazons, your Lulu, which I said last week was the best retailer in the world, last Friday, I believe. JD's an amazing stock. You got PayPal, Nvidia, the same stocks that I've been talking about. But let's look at the weakest stocks. And guess what? Wynn Hotel is now on it. Wynn, let's look at Wynn. Wynn was not doing well, but they are weakening. Look at that. Wynn is not doing so well. Las Vegas, people gambling, don't have a lot of discretionary income right now. Vegas could be locked down again. Wynn is new on my radar. Intel, folks. Intel is not doing well. Let me show you Intel. Intel is no longer the leader it once was, and I did a report on that a few weeks ago. Look at that. Weakness in Intel. All right, big weakness in Intel. Intel is not the leader. National and Taiwan Semiconductors and AMD are the leaders. Intel is just not doing that great, and I had a long report. I told you guys about that, and earnings came out. It just did terrible. I mean, terrible, and I'm expecting more downside. But as far as two new stocks on my list, American Airlines has been there since day one. United Airlines has been there since day one. But Wynn and Intel, those are fresh targets. Let's look at Fox. Yeah, definitely. Just not picking up. Hit the 200-day moving average as we expected. And then coming back down, I would look to sell around the 23 level. Maybe the 23 on a sell stop would do pretty good. If it goes down to 23, it'll probably hit 19. So we got, and that's Fox A if you want to class A. Fox A or Fox. Hasbro, new stock. Let's take a look here. Again, these are new stocks that are on my chopping block that have not been there yet. Again, look at that. Just crossed below the 50-day moving average. So you could see here, we got Hasbro, we got Fox, we got Intel, and we got Wynn. There's others. There's Western Digital, which is just doing terrible. Ross Stores, which is doing really bad. Walgreens, I don't know about Walgreens. I always thought Walgreens was a good stock. Starbucks, people are not going to Starbucks as much right now. Let's look at Starbucks. Yeah, it's just not doing that great. People are spending less time at Starbucks. But if you want real weakness, I would stick with Wynn, and I would stick with Fox or and Fox, and maybe even Hasbro. Hasbro, Fox, and Wynn. Intel, give it a little time. Let's see if it can break the low. If it can break the low, there may be more downside, but it's a little too early for Intel. So for now, Wynn, definitely add Wynn to your short list, add Hasbro to your short list, and add Fox to your short list. Those are new stocks that are on my chopping block. And again, the NASDAQ is not looking pretty right now, and even stocks like Starbucks are not looking good. Marriott's not looking good. NTAP is not looking good. So there's a lot of things that are on the chopping block. But I'm really negative on Wynn, Fox, and Hasbro. Now, did you know that you can take or turn $5 million into over $700 million? $5 million into over $700 million. Little known quirk. And that you can use that same strategy when your account is $5,000 to turn it into $500,000. From $5 million to $700 million, from $5,000 to $500,000. Makes sense, right? Folks, you better believe it. It's very possible. It's called the money link strategy, and it's based on a mathematical fact with a 96% certainty. Not a 50% certainty, not a 60% certainty, 96% certainty. Take the BlackBerry Apple link, for example. BlackBerry declined, Apple soared. How do you find these? I'm glad you asked. Link stock expert, and Jeff is amazing at this. Jeff Zananeri, he's finally ready to reveal the strategy with everyday folks like you and me. I want to get in on this too. Notice how I'm looking at the strongest stocks right here, and then I'm looking at the weakest stocks. See, he's buying the strongest and selling the weakest in the same sector. To say that it's brilliant would be an understatement of the decade. This is how a lot of hedge funds, large hedge funds, make their money. He's finally ready to reveal this to everyday average folks, and I'm just eyeballing it. He's got this down to a science. He's traded this way for years. He's got all his digits, all his numbers, all the numbers tight and solid. He knows exactly what he's doing. That's why if I want to look at linked stocks, I go to Jeff. I don't play around with this stuff myself. Relative strength, I could figure it out, but linked stocks, Jeff Zananeri is the guy. $5,000 to $500,000, extremely doable and possible, especially in the current market economic cycle where we have some stocks making new highs and some stocks making new lows in the same sector. It's an opportunity that, folks, you've been waiting for. Click the link below to discover Link Stock Strategy. Folks, start multiplying your account. Jeff Zananeri has been doing this for over 20 years. When he and I talk, we're in full hedge fund mode. He is an expert trader. If I had to put my money with Jeff, I would be very, very comfortable doing that. I really would. This guy is a seasoned pro. This guy is not a talker. This guy is a real trader, all right? 96% certainty, all right? Just finding the strongest stock and matching it with the weakest stock in the same sector. You can't afford to miss out. Follow the link below. Learn everything you can about this linked stock strategy. It is the coolest thing ever. Talk to you guys soon and have a great day. Bye.